Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Welcome to this week's Top Stock Picks of the Week. I'm Tracy Reinick, and I'm joined this week by Brian Hayes. And we brought you two Zacks #1 stocks that are in very different industries. One is in energy. Of course, I brought that one. And the other one is in healthcare. So I'm going to lead off with energy. And I'm starting with Suncor Energy, ticker SU. Now, you may say, I've never heard of Suncor Energy, and that's because it's Canadian. Big integrated Canadian oil company, and it's wise to look outside the U.S. right here with WTI and Brent, both at over 100, and natural gas at high prices. All of these energy companies worldwide really are doing really well on the earnings growth side of things. And Suncor is one of those. Now, it is one of the big integrateds, as I mentioned, and that means it's equivalent or similar to, I should say, to an Exxon, a Chevron, maybe an Occidental, but it does have the refining side of things, as well as petrochemical, and then the exploration in the Canadian oil sands. But let's take a deeper dive into seeing what the estimates actually look like and why it's a Zacks #1 ranked strong buy, because all these energy companies are really hitting it out of the park here in 2022. So here's the detailed consensus estimates. And you can see for the earnings here in 2022, supposed to gain 191%. They only made $2.04 last year. Expected to make $5.94 this year, and that's with the WTI and the Brent both staying elevated for basically the first half of this year so far. So that's nice earnings growth, and even though the stock itself is up big, it means a cheap PE. Let's take a look at what the earnings growth looks like on the chart. Okay, so this is the price and consensus chart. And you can see that blue, the light blue line is this year, that kind of tan line is next year. Both are soaring there to 5-year highs. Not surprising, again, given what's happening with energy demand and energy pricing. But that means Suncor is trading with a PE of just 5.8 here. So very cheap based on these earnings, and a little bit of an earnings pullback expected so far for 2023, but not much, just down about 11%. But that still keeps these shares really cheap. Now, what's happening with the shares? They've had quite the rally over the last 2 years off of those 2020 lows, right when the vaccine announcement happened. You can see kind of those lows there, that second 2020 low, actually. And then they were basically off to the races. But they've had several pullbacks here, including a big one late last summer into the fall, where it was a buying opportunity. And now we've seen another 10% pullback in just the last month in these shares, as everybody's basically cashing in on their big gains on energy. That's creating another buying opportunity for these companies that just have this solid earnings growth. And in addition to getting it as cheap as 5 times, you're also getting the big dividend yield with many of these companies. And this is a refiner. And so it's got that aspect of it, which is doing well. And the petrochemical side also doing well, plus the exploration and getting it out of the ground side. So it pays a yielding about 4.3% on its base yield. So that's quite a nice dividend in addition to everything else that's going on that's good with energy right now. So don't forget to keep the Canadian energy companies in your sights this year and next year. There might be some deals on the Canadian side. And again, the same market conditions as the US producers and big integrateds are facing. And it's good for all of them here going into the second half of this year. So Suncor Energy, one to keep on your list and to watch this coming earnings season. They don't report again until the end of July 2022, but you might want to tune in to hear everything that's going on energy with all these companies. So Suncor Energy is my pick, SU. And now I'm going to turn it over to Brian Hayes, and he has the healthcare stock that is also a strong buy and one you should watch too.
Thank you, Tracy. My top stock pick this week is United Health Group, ticker symbol UNH. United Health Group operates as a diversified healthcare company here in the United States. They provide a wide range of healthcare products and services, including health maintenance organizations or HMOs, preferred provider services, or PPOs, preferred provider organizations, as well as managed fee-for-service programs. UNH was founded in 1977. They're based out of Minnetonka, Minnesota, and they offer a full spectrum of health benefit programs for both individuals as well as employers. Now, it's no secret that health insurance premiums have only gone one way over time. According to the Kaiser Family Foundation Employer Health Benefits Survey, which was conducted last year, family premiums for employer-sponsored coverage have jumped nearly 60% over the last 12 years. And the rate of growth in premiums has outpaced wages over the same time frame. Employers and employees spent an average of $22,221 last year for family health insurance. And back in 2010, the average amount spent between employers and employees was approximately $13,900. So that family health insurance premium has risen nearly 60% since the Affordable Care Act was signed into law, and roughly 155 million people in the US rely on employer-sponsored coverage. The biggest beneficiaries of these rising premiums have undoubtedly been health insurers. And these health insurers' stocks are the tools that we can use to neutralize increasing healthcare costs. United Health Group boasts the largest and most diverse membership base within the managed care market, and this gives the company a significant competitive advantage. Let's take a step back here and view United Health Group's industry. I tend to place a fairly large emphasis on a stock's industry group in terms of my stock selection process. Quantitative research suggests that approximately half of a stock's price appreciation is due to its industry grouping. So focusing on the top performing industry groups really provides a tailwind to our investing results, and it allows us to not only narrow down our list of stocks to buy, but also provides us with a list of stocks with the best profit potential. And as we can see, UNH is part of the Zacks medical HMOs industry, which currently ranks in the top 35% out of 250 industry groups. And we can see year to date that this group is relatively flat, while the S&P is off a bit more than 17% as of this past Friday's close. And digging a bit deeper here, we can see UNH is currently ranked as Zacks number 2 buy within this industry. The stock's up about 1% this year, so it's vastly outperforming the market. So we can see, the power behind locating leading industries and the tailwind that it provides. Also note the favorable valuation and EPS growth potential for this industry here. We can see that this group is relatively undervalued and has above average projected and historical earnings growth. As we can see, United Health Group is ranked favorably by our style score categories with a B for value and an A for growth, paving the way for an overall A VGM score. UNH also pays an annual dividend of $6.60, which translates to a 1.33% yield. And take a look at this history of exceeding earnings expectations. The company hasn't missed on earnings in many years, highlighted by these green arrows here. UNH most recently reported first quarter earnings back in March of $5.49 per share, which translated to a 1.67% positive surprise versus the $1.40 estimate. UNH has posted a trailing four-quarter average earnings surprise of 3.73%. So they've been consistently beating earnings estimates, and the stock price has reflected this. Looking ahead, EPS and sales estimates for this year, as well as for 2023, appear favorable. Earnings are set to grow 14.41% in 2022 to $21.76 per share on sales of nearly $321 billion, which would reflect growth of 11.58% versus last year. So it's obvious the growth is there for UNH and looks set to continue. And one other point that I wanted to make in regards to this stock is that UNH has consistently outperformed the S&P 500 dating back to the financial crisis bottom back in 2009. We can see that UNH has delivered a price return of 2,285% versus the S&P's 422% return. This is the type of stock we want to include in our portfolio, one that has both strong technicals as well as fundamentals. So United Health Group, ticker symbol UNH, is my top stock pick of the week. Make sure you subscribe to get all of our top stock picks. We bring them to you here on Zacks.com every week. From Tracy and I and everyone here at Zacks, thank you for watching. Tune in next week for more of our top stock picks.